Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. You can do that with Bloomberg's Alexandra Semenova. Alexandra, what are you looking at?
Hey guys, so Intel is obviously the headliner today. It is taking a nosedive. I'm seeing it down about 16% right now. This is after its CEO gave a lackluster forecast. He also warned that the chipmaker was struggling with manufacturing problems. Investors really not liking that. Projections for the first quarter for revenue and earnings both fell short of Wall Street estimates, making that even worse during the earnings call with analysts. The CEO said that it would take time and resolve to turn around the company. That sent shares down even lower. Intel's comeback bid has been marked by production snags, which has been disappointing for investors who are really looking for new products. The CEO said we are on a multi-year journey. Worth noting too that the bar was really high for them, given the stock had run up something like 30% leading into the results and is up about 120% over the last 12 months.
I'm so glad you mentioned that because I feel like that's the most important context here. Yes, yeah. Absolutely. What's your next one?
So I'm taking a look at some of these solar stocks getting a nice boost thanks to Elon Musk. He made some comments over at Davos. He said that SpaceX within the next few years will be launching solar-powered AI satellites. Among some of the gainers, I'm seeing Canadian Solar. That is up about 8% right now. Array Technologies, Emphasize Energy for solar. Those are some of the stocks that are moving on this.
Capital One Financial Corp.
Yeah. So they have a lot of news today. They reported earnings and they also agreed to acquire Brex, which is a fintech company that focuses on corporate expense management. This is a $5 billion deal. They're going to buy Brex for roughly 50% cash and 50% stock. The deal would be actually the biggest since they acquired Discover Financial Services last year. And of course, they also reported earnings. Fourth quarter net income almost doubled from a year earlier. Adjusted earnings per share did miss analyst estimates, and then provisions for credit losses surged 57% from a year ago. Important to note here also that their CEO, Richard Fairbank, made a comment about the 10% interest rate cap proposal. He said that less available credit could tip the economy into recession.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.